Unless you were under a rock yesterday, you probably heard the news that the Fed lowered rates, and you probably are wondering one of two things. How does this affect me, or does this mean mortgage rates are going to take a drastic dip? When the Fed lowers interest rates, they're basically saying, hey, it's cheaper to borrow money now, trying to get us to spend money. The Fed controls a different kind of interest rate than mortgage rates. These cuts mainly affect short-term loans like credit cards or car loans. Mortgage rates are more influenced by the bond market and overall economic conditions. More on what to expect with mortgage rates in a minute. First, how do the cuts from yesterday affect us now? For people with loans, if you have a short-term loan, like a car loan or a credit card, you might end up paying less interest over time. On the flip side, for people who save money in the bank, you can probably expect to earn a little less interest. So the money you have there saving will probably grow a bit slower. So what usually happens with mortgage rates? Well, while mortgage rates do not directly follow moves by the Federal Reserve, this is the first cut in over 4 years, and it's likely to have an impact on the housing market. Actually, the declining mortgage interest rates over the last few weeks indicate that this cut was likely baked in. When the Fed cuts rates, sometimes mortgage rates don't change at all, or they could even go up a little bit like we saw yesterday if other economic factors are at play. However, we expect rates will likely fall further, sparking more housing activity. Today's rates for a 30-year mortgage are hovering around 6.09%, which is actually the lowest they've been since February 2023. If you've been thinking about buying, this is the time to get really serious about getting pre-approved and making a plan before the housing market just really gets crazy again. If you've been thinking about selling, now's also the time to take advantage of the influx of buyers we're likely to see who are going to have a little bit more spending power and who are going to be coming off the sidelines and getting into the market. I have lender referrals I'm happy to connect you with if you need a lender to talk to, or if you just want to bounce around a few ideas about buying or selling. Of course, I'm always available to help you.